Welcome everyone, Simon here from the Whales of Wall Street. We have XDC video today. We have a bit of a topic around bills of lading. We talk about what that actually is, why it's so significant with the utilization of blockchain, and certainly the digitalization of bill of lading as well. So this is all relating to trade finance topic, and very much orientated around XinFin, XDC. We'll go into that a bit more detail in a second. Of course, if you're new to the channel, don't forget to smash that subscribe button. Absolutely massively appreciate it. We're nearly on 12,000, which is absolutely amazing. Of course, try and do my best to get as many videos out as possible. And of course, don't forget to hit the like button as well, so we can share the wealth of education and knowledge to as much people as possible, or as many people as possible, sorry. But let's go into this topic. So we haven't done a XDC video for a while. I think the last one was about a month ago. I always say this, like in my head, it's like 2 weeks ago. But there we go, it was the XDC. We did speak particularly around trade finance in general. And pretty much the topic today is about this kind of bill of lading aspect. Before that, we of course just talk about trade finance in general. So we're going to loop these elements together to understand why I'm relatively excited about XDC as a project moving forward, and why I invest in it, why I accumulate these XDC tokens in my portfolio. Now, let's go straight into this one, guys. So this article, I'll leave a link in the description below. It's really well written, and it very much accommodates a really interesting topic here. So first and foremost, it links together some really interesting companies. I've pulled up a few of them from a browser perspective just to give you a bit of a concept behind this. You see here, obviously, XinFin, which is a trusted partner or client of this company called Yoda Plus. We've also got DocuTrade as well, through the utilization of Yoda Plus, and we got this as well, Open Attestation. I think that's how it's pronounced. But anyway, putting that back a bit, we got this concept of the XDC trade network. So we covered this in the previous videos. XDC has been around for some time. When we got very excited about XDC, I was very interested in their hybrid blockchain mentality. This meant that they could go down the route of the public sectors or the private sectors, or even indeed combining those two together. As time developed, of course, loads of different ecosystem partners started building with XDC or on the XDC's XinFin network. One of those in particular was the likes of Trade Tech, for example, where we in the past have talked about that Trada token. So that's a bit of a mention here. Another really interesting reason why I like this combination is the utilization or integration with the likes of the World Economic Forum. So we've got here the collaboration between Trade Tech and the World Economic Forum and XDC network, all in one sentence. That's really a powerful statement there. Now, the World Economic Forum, well, we have our kind of pros and cons mentality around them as an organization, for a better word. Very strange group of people, and a very strange group as an organization in general anyway. But the reality is, when we look at this in depth, we have to really appreciate that anything really associated with the World Economic Forum is a Brucey bonus, really, when it comes to maybe adding certain tokens or portfolio projects to our accumulative pattern. So we've got these elements here. We've also got the mention of a couple of other companies here. So we've got the TFDI, which I went to the TFDI event a couple of months ago. Thank you, with Andre Casterman, which is absolutely fantastic. So much great insight. And great companies there as well. XinFin, XDC was one of them, along the likes of Allianz Insurance, Lloyds Bank. There was some unbelievable pilots and testimonials of what's going on in the world behind closed doors, really. And we won't see the fruition of these conversations, for some time. In some instances, some have come out into the public domain, which are very exciting. But one of the clear topics was trade finance in general. So this is obviously a big part of the TFDI or the TFD initiative. And this whole big concept, this number, $19 trillion worth of a industry, that is a phenomenal amount of money. Now, That's not to say that that whole entire amount belongs to XDC or anything like this, but they will certainly be taking a big part of this, the big pie that is trade finance. And we've talked about in the past about the different avenues and aspects of this, supply chain, logistics, all of these areas that you can consider when we talk about trade finance. And not just about shipping and things, it's also how people do business together worldwide. So we've got these really interesting areas of cross-border payments, tokenization, real-world assets, all of these things coming together. And XDC really pushes its narrative with that trade network that it's created, the use of the trade tech exchange as an example. And it was very interesting. I actually saw a demonstration of the trade tech platform between variations of parties and companies at the TFTI event in the last couple months ago. And it was absolutely fascinating. I couldn't believe how many companies are already using this, and especially that banking, insurance level, institutional level is absolutely phenomenal. And of course, all these incorporating around the new ISO 222 compliance around financial messaging is very important as well. And there's of course the conversation around the MLETR, I think, yeah. Think of all those letters the right way around, that corporation as well, because there's a lot going on with that in general. I'll try and do a separate video on that, but there's loads of really good ones. I think Coin Bureau did quite a cool one a while back, but even just like the likes of France, for example, are turning this into law, just like the UK has as well, and many will follow suit. So this whole trade finance aspect, this trade module of digitalization is really, really impressive. It's moving forwards. And all these companies integrating, coming together with their own frameworks, their API integrations, interlacing as well, AI, 5G, IoT, cloud, all of these aspirational platforms and service solutions coming together. And these next few years are going to be massively imperative, guys, to really understand, to have some further education within ourselves to learn more about this. And there's definitely some time still. However, I would say safely that from that 2025 point onwards, when the new RTGS system kicks in worldwide, that's going to be a really demonstrative area of the capability of blockchain utilization in the area of trade finance. So the point with this is very much around, as we said, there's loads of different kind of pathways you can go with relation to trade finance, and one of those areas is bills of lading. So we've covered this in the past, but just for those that don't know, so a bill of lading is a document that lists the goods being transported, the destination, the name of the shipper and the consignee, and other important information. Bill of lading is used as a receipt of goods, a contract between the shipper and carrier, and a document or title. Now, when this bill of lading gets passed around, essentially the ownership of the goods gets transferred constantly throughout that process, and it's obviously a massive importance. So if you can think amount of monetary value of the produce, of the materials, the commodities that are being transferred across all over the world all the time simultaneously, there are so many things to have considered, and it's a very manual process. I'm going to do this a bit backwards actually, because I want to show you this. This is a really good demonstration of all the different processing points of an existing bills of lading process. So I'm not going to read out individual elements here, but you can see there's clearly some strategic areas of interest here when it comes to the process. And all of these things are worth a lot of money. They're worth a lot of resource in terms of time and the amount of people that are utilized in the current processes to process and validate all these particular areas. I'm just going to pull out a few so it kind of makes a bit more sense. So you've got like export customs declaration here at the beginning, for example, the certifications of origin. So obviously like the proof of productions, where it's come from, the legitimacy of it, is it fraudulent, whatever. Import licenses, of course, and you move your way across insurance certifications. Now, I'm going to do a video on insurance in general with the utilization of blockchain, because being at the TFTI event, and I've got so many notes, I still haven't done the video because there's just so much and I would go down rabbit holes with it, but I was kind of never really understood fully the insurance aspect of or capabilities within trade finance. So yeah, moving swiftly through this process, We've got duty and VAT exemption documents, again, more custom aspects to it, freight invoices, manifest preparation, bill of exchange, and then all the way towards the end, cargo insurance, which is absolutely phenomenal conversation just in itself. And from the notes that I took from the TFDI event, which I will try and get done in the next few days. I know the event was a while ago, but there's so many things I took from it, and I was trying to get the best way to present this to you guys. But the insurance aspect of trade finance is absolutely staggering. So I'm just going to read out a couple of bits here. Insurance market worth over 5.5 trillion as of 2021, well over 40 billion cost to the non-health insurers when it comes to fraudulent claims and things that go under the radar. Climate change, crop insurance, guys. I don't even understand the concept of that, but that's insurance for any crops or harvesting that go wrong throughout the year. Climate change, 37.9 billion to 60 billion by 2030. $60 billion crop insurance. So that's all really interesting information around trade in general. But yeah, trade finance insurance, those crops, not just from the harvesting perspective, but the insurance of those crops or commodities or property, materials, merchandise, whatever, throughout that whole process. And then the insurance of the logistics, and then the insurance of ownership and all these crazy things. But anyway, so there's a big list there, and that's not all of them. It's just a very good overview. I love this diagram. But then look at this. Blockchain still takes those elements. However, because of the digitalization of it, they can remove a lot of that resource aspect, increase the efficiency, the speed of it, and reduce cost. It's absolutely phenomenal. I wrote this down for the research, that there's a minimum of $6.5 billion can be saved because of the digitalization of most of these processes, bills of lading. It's absolutely fantastic. And what I thought would be really interesting here as well, very quickly, is to showcase some of the potential problems that currently exist with bills of lading. So as I was scanning through this, we've already kind of talked about what bill of lading is. You can check out the previous videos as well. However, you see couple parts here. You can have potential duplicates. You can have potential discrepancies in regards to the statement letterheads, consignee letters, all of these areas, but also more than one customer demanding delivery. So there's all this concept of like multiple customers, multiple businesses to be working with. A receiver cannot provide original bill of lading. Why? What on earth would that even happen? However, there are innumerable circumstances that may lead to a request to release cargo without the original bill of lading being produced. In extreme circumstances, the supposed receiver's intention may be to steal the cargo and the sale proceeds, while the seller of the bank still retains the original documents. There's all these crazy things, potential fraudulent activity, goods released to a wrong party. I've seen that so many times in the distribution world. You would not believe how many times that happens. And it often explains sometimes when people have delayed deliveries, even at home, from a residential perspective. Absolutely mental. The law will support you if you refuse to deliver or release cargo until a valid bill of lading is produced. So there's all these things about the legal aspects. So there's a few terminologies there of why bill of lading has so many issues. But then what's really interesting is the benefits of using the electronic bills. So processes optimization or processing optimization, safety. So this is very much going around the physical movement, avoids losses or frauds. Or fraudulent activity. Immediate information. This is very important for like real-time data, real-time information. That's kind of a boring one, useful for everyone. Fewer mistakes, understandably, because you remove potential human error. A lot of it can be done by artificial intelligence or the automation processes. Hence why when we talked about some of these companies in the background, these all interlace very cleverly together to try and remove any potential concerns or issues with that. Transparency, of course, the utilization of blockchain is very appropriate for that point. Significant cost savings. We did mention that cost there. It's mentioning here that it can save around 4,000 million or 4 billion, I believe that is, euros annually. But yeah, I just gave you that deciphered factor of around about 6.5 billion, which is absolutely incredible. More ecological, so facing serious environmental challenges such as deforestation and climate change, reducing paper consumption. This is an interesting point. Now, blockchain is supposed to be very sustainable. We see a lot of chains out there like XDC, Hedera promote this very heavily as well, Ripple, etc. with the XRP token. Most of them try to. ESG formalities right now are massive. There are implemental fines coming for big companies that don't adhere or have falsified numbers, etc. towards ECG protocol. But in the TFDI event, it was staggering how much paper is consumed on a daily basis and an annual basis in general around the world. But for trade finance or trade in general, the amount of paper is absolutely extortionate, and that is definitely something applicable to the maritime side of things as well. So it says here that bill of lading is one of the many documents that can be used electronically. So now exploring the digitalization becomes more and more attractive for everyone. Many shipping companies have already joined, and freight forwarders can take advantage of this opportunity. I'll leave a link to this. It's very, very interesting read. I haven't read all of these pages. I think I've got about down to around 33, 34 pages in. But yes, this concept around here, the bill of lading on the blockchain and analysis of its compatibility with international rules on commercial transactions. Now, key things to bear in mind, this is from 2021, but it's really fascinating to see the development and understanding the developments since this time, because since then we've had the trade or the Digitalisation Act going through UK Parliament, and it obviously became law and its own act as well, which defined the future of trade finance, and particularly from the UK's perspective. But this gives you a very, very good breakdown if you've got a bit of time. I mean, they're not too big a pages. It looks like there's loads here, but if you look at it, it's kind of like half a page per one. So it shouldn't take too long, hopefully. But it's absolutely fascinating to read through it because it gives you context of where we've been and where we're going. So, going back to that point about, real-time aspects, one of the benefits here, this is really interesting. Of course, we've always talked about the utilization of artificial intelligence and real-time data, for example, for this. Now, I'm going to revert back to a point that I made in the recent IOTA video. If you can think about this logically, how we can start predicting future trends or start making things more economical and more sustainable. So it does link these two in terms of more ecological aspects here and process optimization and the fact that you've got immediate information. Those three, in my opinion, work closely together massively. So what I mean by this is if you take that whole entire process of us, let's say we're in point Z, we're the end game, we're the purchasers, the consumers. There's so many different letters before the letter Z, obviously, and each of those letters, for an example, goes back to this point here of all these different aspects that need to be done before that product gets to us. There's a lot of legalities, a lot of forms, a lot of formalities to go through, as we've kind of roughly explained, just even clearly on this diagram. Now, if we go back to that point A, it's at the moment, or it is getting better, of course, but certainly in the years that I was working for distributors, and on the other side of it being working for companies, consumer electronic companies, whatever, that utilize distribution companies. So I've been on both ends of the scale of this, and I understand the logistical barriers, logistical nightmares that can occur. And a lot of it over those sort of 5-6 years that I was working in those industries, very manual in terms of like taking orders from businesses or customers on an individual basis, or it might be trying to do it in a forecasting manner based on last year's sales, the last few years' trend patterns. There was a problem. I think it was around 2012, 2013. It was one of the first times Amazon created the Black Friday momentum, and the years before that, we're talking about like 20 years of data, went out the window because all of a sudden those trend patterns disappeared. People weren't buying. Why? Because this new concept of Black Friday came out at the time, and literally so many businesses went bust in that year because of that pattern disappeared. So everyone wasn't buying 3-4 months before Christmas and stuff like this. They waited till, I think it was November or October, whenever the first one was, and got their purchases on that 1 or 2 days. A lot of retailers mindsets and philosophies changed that week. And that was massively evident because how many retailers or high street vendors have disappeared off the face of the earth since then? Some of them have managed to survive but are still struggling. Some of them have reduced their workforces significantly so that they can still exist, but in an online retail e-commerce format. And arguably, a lot of it potentially could be argued as systematic. It was a competitor brilliance from Amazon. But my point being is that forecasting module completely went out the window. So imagine having real-time data. And that also means that you can go back to the manufacturer or your supplier and know in real-time data what the trends are. You can go into environmental factors. You can use artificial intelligence to work out the environmental factors in a few months' time. For example, rain, wind, sun, whatever. That could determine or change the pattern of how things are harvested and seeded. And drones could do that based on algorithm and AI data. And all of a sudden, you've got this pattern, this predictive aspect. So when we're looking at things like ChatGPT or trade bots and things, they're kind of measuring the pattern of the future already before humans could ever possibly do. It would take us ages. And we've seen that modulation because it takes ages for us to forecast, provide that forecast, then have things made and manufactured, but then you get them shipped over and then you're sitting on loads of excess stock because you can't shift them because it's the wrong time of the year or the environmental impacts, economical impacts. This is where it all loops around. And so you link back to the bills of lading where you've got all these different levels or layers of aspects of the trade finance module. You can also link that heavily with the fact that actually maybe some of these goods could be paused somewhere, and we know that they've been paused automatically. We don't need to worry about filling out 10, 20 different forms or having 20 people involved in this. It could just be sat on blockchain to say we've stopped it here because the supply isn't there right now. Hold it here or hold it there. Transferring those transactions of who's paying for what or increasing, decreasing costs in real time as well. All of these things are hugely significant to the entire supply chain mechanism and trade finance in general. And that can be applied, that philosophy can be applied not just to products and produce, it can be applied to the business levels, insurance passing of documents, real-time insurance. Can you imagine that? How much money and premium could be saved rather than speculative numbers or guesswork or forecasting can actually be done on real time. And we wouldn't have these crazy fluctuations year on year. It would just be a steady, almost like a tracker, like a mortgage tracker kind of thing. Something that you could just, well, sorry, this is what it is. It's real. You want the real transparency here. This is what it is. So it's really, really interesting to see that aspect occurring. But yeah, for me, it's just fascinating to see XDC's development in this area, its integrations with other projects and companies in particular that really heavily orientate themselves around this area. But look at this. This is one thing I want to talk about quickly, which is looping all these companies together, looping all the conversation together in one hit here. We discussed about Lloyds Bank doing the $48 million pilot scheme with several parties around buying and selling of land, which would normally take years. It took 1 hour because of the usage of blockchain and digitalization of deeds, i.e. smart contracts. And it's the similar approach here. So this news article is from November, but it relates to DocuTrade's aspect from Yoda Plus, XDC, of course, as well, and a few other companies. So in this pilot, the shipper tokenized the electronic bill lading and fractionalized it, enabling capital provisioning for the shipment duration. This innovative approach powered the DocuTrade provided trade flow capital, the shipper, with liquidity as soon as the shipment sailed, giving them a cash flow of 7 days transit time. That's the equivalent of. The ease of transaction was significantly enhanced as the trade documents were digitally created, making verification and transfer a seamless process. The commodity shipped was copper Milbury scrap for green recycling, with the transaction value pegged at USD dollars or US dollars 150,000. It's quite incredible, really. So it goes on to say the solutions utilized in this pilot comprised of the XDC Trade Network as the marketplace for trade finance, DocuTrade by Yoda Plus for digitalization of trade documents, an open attestation framework for ensuring MLETR compliance standards. So it's looping these all together. It's giving a great pilot scheme to showcase that this can be done in a very short space of time with a lot less people, saving a lot of money and saving a lot of time. And more importantly, for companies, extra cash flow, extra liquidity. We mentioned this before, and it was another example that came out of the Lloyd's aspect, where they did the first ever electronic trade utilizing blockchain with Matalan, the retailer. And it saved so much time. What would normally take weeks, it took I think it was a few hours or something. And this is that exact same principle here. The amount of money that was saved, the amount of resource that was saved. And you can then multiply that substantially in the trillions of dollars, or even billions of dollars, as we mentioned about how much money can be saved with this aspect of system, but trillions of dollars in general for how much faster things can be done. So we look at liquidity and cash flow. What this means is that a shipper or a supplier or a manufacturer, and on the other side of the scale as well as a buyer, if you have these cash flows going faster, it means you can order more or produce more quicker. And this is how the economy could grow significantly faster, especially with the orientation around artificial intelligence, things like CBDC, stable coins. All of these aspects will enhance significantly the way business is done worldwide. So it's really interesting. If you find this too confusing or anything, just let me know, because I am going to be doing some proper dedicated videos to certain areas of this. But I just wanted to be clear on the aspect of bills of lading, why it's significantly important to understand how XDC can sit within this framework, and what's to come. Because that $19 trillion is now. Imagine what that will be over the next 10, 20 years, 30 years. Unbelievable, right? And especially with the integration of things like 5G. Imagine autonomous harvesting, seeding drones or tractors, all of these things. Cloud storage of information and data. And then you've got things like IoT, machine talking to machine learning to determine when things need to be made or not made. Talking to your fridge, talking to everything that you do, use, produce, consume, everything going through one aspect here of blockchain. It's absolutely phenomenal. So guys, that wraps up that topic. It's very interesting. Hopefully I explained it relatively well. But as I said, if you've got any questions, just throw them at me. All that you kind of really need to know is that XDC is a massive powerhouse in this area, and people always complain maybe about the price point of XDC, but I need everyone to know and understand that not just XDC, but a lot of these are suppressed or lower because they're not fully utilized yet. But mark my words, when these are utilized, we're not talking about snippets of money here. We're talking about trillions upon trillions upon trillions of dollars worth of market value. And a lot of that will trickle into some of these asset classes for sure. And I truly believe XDC is one of those, just as well because of the events that I've been going to, and obviously me and Sunil as well. Understanding XDC a lot more has given me great vibes. So as I said, it's not just XDC out there that are doing this similar thing, but they are for sure leading the way. And with their integration with ICC, TFDI, essentially looping through to the World Economic Forum, you can't really go wrong. So let's now move on quickly to the topic of the price. So at the moment we're floating around this 4.98 cents. Let's just call it 5 cent mark for argument's sake. And I'm just going to pull over quickly the previous fib levels. I'm trying not to move it too much. I think it's roughly around there. I'll just move this one across as well. So it gives us a bit of the macro and more shorter term frameworks here. So you can clearly see there's some good bounce effects around some of these macro and longer term fib retracement levels. What's more interesting to me though is if we pull the data out to these points here. So back in 2021 when we had the bull cycle, you can clearly see across, you can kind of see this red dotted line. This is the current price point. And look at this. I've circled this in ages and ages ago to say that this is a very interesting area for XDC, because on the way down, this was support. It bounced back up. It failed after a small burst here back in March 2022, and then around May 2022 respectively, it penetrated downwards. We couldn't quite creep our way back up there until around this mark in April 2023, taking us up to around about that 5 cent mark again, where we are today. We had the great news of the Trade Finance Acts going through, XDC's implication towards that, including the Trade Network launch as well. Had the great run up, and now we've been sustaining itself along this line for some time. And I've always been sitting there going, I think I'm just going to wait to see if it comes back down to this 3 cent mark. But what I have been doing is some manual purchases around this area. In general, on the upward trends, I try and wait a bit longer, and I try and grab it around this 4.7 cent mark again. Similar areas that we've drawn before. I still have limit orders at 3.7 cents, I think, and just above the 4 cent mark as well. I'm always going to keep them in there just in case. You never know, we could have a collapse, not just on XDC, but Bitcoin and everything in one day. It depends on leverages. It could depend on so many different factors. But the other reason I keep them there, if you see this is huge. And of course, you've got people trading this left, right, and center for the last few months. But at some point, sometimes you do have to come and retest these areas, because the reality is that we've only really got arguably 3 data points at the current 4.7/5 cent mark. And in my head, that's just not enough to sustain a real big push forward, not legitimately for a long period of time. Now, you could argue that we might be seeing similar patterns to what we saw at the beginning of the bull cycle last time round. Now, I in my head think the next bull run will be towards the latter stage of 2024 into 2025, because we've got things like the interest rate hikes, reductions, hopefully around that time, obviously a few months after the Bitcoin halving events as well. And we got intricate detail about the RTGS systems launching throughout 2025 too. So that's where I see my bull point of excitement there in the bull runs. So I think there's plenty of opportunity for these retests down at these lower regions again. But if they're not, we can argue the fact that, okay, 5 cents compared to the previous all-time here all the way up here at 20 cents, there's a long way to go. So if I just draw that in really quickly with the price range, there we go. So the current price point to the previous all-time high sits around about a 86% increase. So it's not massive compared to a lot of assets out there, but if we consider the factors, sorry, I'm going completely mad. I was going to say, like, that's not much at all. Stupid. 284%. There we go. Still not significantly high as compared to many other assets, but XDC has been one of those slow burners in my opinion. I anticipate us to get towards at least, very minimum, that 30 cent mark. We may potentially test the 50 cent mark. Why? Because we've got all these trillions of dollars of application coming. And I think that the timing is perfect. The acts are going into law factors. We've got the MLETR compliances, standardizations, got ISO 222 compliance now in formulation as well. The RTGS system kicking in, CBDC, stable coins, regulation. I think we can get a massive push. And if we do that, of course, we're reaching up to the 500 odd percent. And if you do want to match it towards previous all-time highs like other assets showcase, you could argue that 50 cents is definitely applicable, potentially as a predictive price point that we could get to. However, that's very exciting. I want to look at the here and now, and that's why I've got these positions of orders currently, as well as doing my manual purchases. When I see those slight dips downs under the 5 cent marks into that sort of 4.7, 4.8 cent mark regions, and to kind of clarify that point, on the RSIs at the bottom left here, we see 48. That's a good mindset in my head to go, okay, we're at good ground there. Obviously, I want to try and see that around 42, so we've got even more upside rather than, you know, the reflected downside. If you go back a few days, pretty naturally, they were slightly higher, so I wouldn't really touch those personally, but I wait for these kind of areas of interest before I accumulate a bit more. And then also on the right hand side here, you can see that we're still in this kind of like a bit of a bear mode. The weekly, the monthly, and the 3 months are a negative for XDC because we had that big spectrum upwards. So that's why the 6 months and the year to date look really strong still, and even the 1 year in general. But it does have a reflective point, and back to my point as well, that I think and feel that we should need to retest these areas at some point properly. And that usually intends that it may have a spectrum downwards as well, because you have to confirm that support line at that 5 cents on both sides of that line, in my opinion. So let's see how that plays out. But one thing's for sure, as I said, XDC is a very exciting asset. It's a very exciting area of interest that it accommodates itself in. And it's not just trade finance, it applies itself to so many other areas. But when you think about the insurance industry, supply chain, trade finance, wow, these guys are going to do a significant job and have a significant role in this space and time with its blockchain utilization in this area. So that's very much wrapped up this topic, guys. Hopefully it's been of interest to you. We're going to wrap it up there. Thanks for watching. We'll see you in the next XDC video. Bye bye.